for opening this file. Thank you for your time. This is one of our series yearly for the government federal level budget, interpretation and application to you. This year is definitely very special. The government budget release time has been delayed for half of the year. Normally, it happens in May, which we will be able to plan before the end of June. But now it's released in October. It's not something too abnormal for the government because it's doing half-yearly budgeting anyways. But for the taxpayers, it can be a little bit chaotic. I probably underestimated. Let me correct myself. It's very chaotic. So let's see what I can help you to interpret this year's government federal budget to be relevant and practical to you. Let's start. Federal Budget 2021. I would like to focus on 4 areas only. Individual taxpayers, business, mainly the small and medium-sized, superannuation and pensioners, and the last is government spending. This is a very broad view of through the past years of government revenue and expenses. This year, 2021, is definitely very different. It's challenging for the least, but also to see if the government spending, in fact, will help the economy to recovery. Here are some highlights, including personal tax cut, instant asset write-off, small to medium-sized business tax loss being able to carry back, some changes of R&D tax incentives, expanded small business tax concessions, superannuation changes, job makers, of course, and some government spending and investment. For the individual taxpayers, the government is bringing forward the second stage of the tax cut to this year. It has lifted the 19% tax threshold from 37,000 to 45, and the 32.5% tax threshold from 90 up to 120. Taxpayers earning between 45 and 90 will end up with an extra $1,080 tax back. Taxpayers earning more than 90, but of course below 126, take back home an extra of 2.5. Here is a comparison of the original and new low and medium income tax offset. For what's relevant to you as an income taxpayer, as an individual, you don't have to do the calculation. Well, your tax agent will do the calculation on their end of the software, and when you lodge your 2020 tax return, it might reflect on the first quarters of the tax refund due. But really what's going to happen is that now the tax threshold changed. Tax withheld on your gross wages will change too. Means that in the next couple of weeks, you will receive more net cash after the tax withheld from your wages taken back home. Because the government's increased low and middle income tax offset brought to current year, you will find your net wages taken back home increased as the tax withheld becomes less. For business tax, mainly there are 3 areas possibly relevant to your current business. First is asset write-off. Second is recovered tax losses happening this year, and create jobs. Asset write-off brought into effect from 2020 financial year in March. This policy was due to end by the end of June. Back then, some of my business clients rushing into business decision to buy some new vehicles. Well, this policy has been extended as part of the budget to the end of the calendar year 2020, which including the details of the following. First, is the asset is up to $150,000 threshold. And second, it is the eligibility that has been expanded to cover business with a higher turnover, up to 500 millions. This means there will be more assets can be eligible to be written off, and there will be more business eligible to apply these rules. It means when you purchase an asset, traditionally, the depreciation need to be carried through the next few years. But now, because of this new rule and budget, the depreciation can be applicable 100%. In turn, practically, it means that you will be able to claim more deductions on your tax. Therefore, your taxable income will reduce. Therefore, you will pay less tax on business. If you ask me if it is a good idea to buy a new car, about 120, or to buy some equipment, I would give you some broad general advice that do not make decision purely because of this concept called write-off. Write-off doesn't mean the 100% of the investment to the asset will be fully reimbursed by the government. It's not. It's only to reduce your taxable income. For some structures, it may not mean no differences because maybe your tax structure doesn't really apply a higher tax rate at all. If there is no tax to pay, there is no tax to save. Do not make business decisions purely because of some incentive temporarily. In the long run, it actually will influence your business decision on different timing. What it means that if originally, for example, your car is due to upgrade anyways, you might want to consider to purchase a new car this year rather than next year after December. Reason being, it can reduce your tax. But again, it's not universally applicable for every businesses. If your business doesn't pay much tax at all of a sudden you make this decision to invest and increase your cash outflow. However, in a different scenario, if your business is not paying much tax at all, as the structure is set up that way, and you are not in a very positive cash position, it may not be a good idea to buy an expensive car or a piece of equipment that won't be ready to use, generate cash inflow, because you are draining your cash without enjoying much benefit at all. Next is the Job Maker program, which has been mentioned half a year ago. The first time I heard it was when the COVID-19 hit Australia. Prime Minister has been mentioning about this program for half of the year at least. Now it comes to on paper what it looks like. I can find online there is a fact sheet of 11 pages. Unfortunately, there's not much information on the ATO's website because at the time I'm speaking, it's not yet passed to law. So ATO cannot answer much of your question and queries. But what we can see is from these 11 pages of the fact sheets that there are a lot of strict criteria for the eligible and ineligible criteria of businesses and employees. It's not very easy to enroll in. The program including $200 per week for a new employee aged between 16 to 30. Well, $100 per week instead for the aged 30 to 35. So you can tell the government wants to support new employees who are not employed before and in the younger age group. There are other criteria, including 20 hours minimum per week as the employment terms. For some younger employees, it may be a good idea to see if you are eligible for the program. It may cover most of the wages, but really, if you want to have an experienced employee with a higher level of the engagement duties, it's not for you. Also bear in mind that the claims only become available from February next year. So I think it's more like to be an easy job for a younger group of the employees working part-time. It will be targeting at that. Next is boosting apprenticeship. The government department looking after this is different from the last Job Maker program. Job Maker program will be administered by ATO, while this apprenticeship, you need to contact Australian Apprenticeship Support Network, short as AASN. I put the website link here, and I tried myself. I myself is in Melbourne. I choose Victoria. The webpage pop up 4 contacts. It's not overly complicated. If you're interested as a business owner, I think that's your first contact point. Go and give them a call. Find out if you can get some eligible workers potentially for you. The content of this program is a subsidy of 50% of the wages to a maximum of $7,000 per quarter. The time period is after 5th of October 2020 and before the end of September next year. It is a very good structure too. The apprenticeship has been effective for many years. Well, this year, definitely it has increased and more business will be eligible. And hopefully you can get some good employees from this program. Next is research and development tax incentive. It comes into effect from next year, which is 2020-22, not the current year, 2021. So next year, in July or August earliest, when you lodge your tax return, expect a big difference of your research and development tax incentive. You probably will get disappointed because it's not this year's applicable. The content of this change mainly is increasing the research and development expenditure threshold from 100 million to 150 per year. For companies with lower turnover of 20 mil, there are 4 big changes, including scrapping the 4 million cap on the cash refunds and the 2 tiers. Also, the refundable tax offset set at a 18.5 percentage points above the company's tax rate. Also remove the proposed 4 million cap on the refundable offset. So practically, it means that if your business is falling into this category, you will receive more R&D tax incentive in 2022. For business with higher tax revenue turnover, more than 20 million, there are also some changes, including 2 tiers changed from 3 tiers, and the rate and also unused tax offset can be carried forward to later years. Next is a good one. It's a recoup of tax loss. Business currently running at a tax loss can carry back tax losses made in 20, 21, and 22 income years to be offset against the tax paid in relation to the 19 or later income years. Give you an example. If a business is making a less tax profit this year, for example, 50 grand, obviously applying the tax rate, the business needs to pay the income tax to ATO. However, in this current situation, the business owner may feel lack of support because the cash is already in the stress. It might be a good idea to get equipment finance to purchase a new equipment, for example, for 60 grand. For that 60 grand equipment, instant asset write-off is applicable, which in turn, the business will have a negative 10 grand tax loss. This does not only mean the business doesn't pay tax this year, but also means that the business may get a tax refund. This negative $10,000 tax loss can be used to offset the previous year tax profit. If you previously has paid tax on those years' profit, well, the tax is now refundable to you. Here are two special tax topics and changes. One is FBT, fringe benefit tax, and another is capital gain tax. Fringe benefit tax will be exempt for some group of the employees that are changing the position or made redundant or soon to be made redundant. So some of the benefit they receive will become fringe benefit, not tax deductible anymore. These benefits are subject to fringe benefit tax. Well, because the current situation, obviously employment situation keeps changing and very unforeseeable. To reduce the reporting and compliance cost and also as a support financially to these employment changes of the arrangement, it becomes exempt. Another one is capital gain tax. There is one extra CGT exemption from the budget for those granny flat arrangement where there is a formal written agreement to provide accommodation for older Australian or people with disabilities. It's not applicable for commercial arrangement. Rather, it's mainly from a family member or from a friend privately want to provide this residential accommodation to an older Australian or some disabled Australian people. I think it is a good support from different approach rather from the direct financial support from government, but it is indirect way of encouraging private property change and for a special purpose of the use in future. This will encourage people who want to sell an accommodation to a special group of the people. There are some small changes on superannuation. I don't think it is very radical comparing with the previous superannuation reform. It's mainly the simplification of superannuation system and make the superannuation system actually working for the members. The first one is to simplify the superannuation funds that one person can have. There are many people in Australia have more than one super fund. Whenever they go to a new employer, sometimes they will have to create a new fund simply because they don't have the old fund information ready. So this creates an overly complex, unnecessary situation for the superannuation system of the country. In the future, there will be attached one super fund only to one individual. So it doesn't matter where you go, it is almost impossible for you to forget this information of your fund because it's possibly in the system attached to your tax file number or your name. So that is simplification of the super fund system. And then it's about the performance of your super fund. Some super funds are not performing very well. It can be in the retail funds or it can be in the self-managed super fund too. So there are some new changes to review these funds and to improve their performance. If not, probably will be reduced or closed down. There are previous mentioned superannuation measures still yet to pass as law, including increase of the member number, including increase of the age for non-concessional contribution. And of course, there are already in place the temporary withdrawal of your 10 grand and another grant from your own super because of the financial difficulties due to COVID-19. From what I know, the government has started the review and audit. If you withdraw it with the wrong reason, obviously you need to pay back. For the pensioners, aged care funding up to $2.2 billion, including $1.6 billion for 23,000 additional home care packages. Aged pensioners will receive additional money for a period of the time, and for senior Australians who wish to continue to live in their own homes, there will be additional home care packages. Last, I want to emphasize where the government's strategy of its spending this year. It has been spending a lot in the business incentive, in supporting the economy to recover, as we mentioned before. But this year is a very difficult year for Australian businesses and the Australian government. The government has less revenue, but the government need to invest still back to the country and support creating more jobs and bring back the economy. The government has been carefully considering, and they decide to invest mainly in manufacturing. There are different approaches how to support the industry of manufacturing. Mainly is in the supply chain and the innovation. I think behind all the policy, the spending is more targeting for the future, not bring back what happened before. It look forward, look at young people, look at new business area, and create more channels and more markets in the new area to make things, to create things. So I guess it's aiming for the future. That is the focus. For the regional Australia, government major spending and investment are listed as below. $2 billion concessional loans for the farmers, $2 billion for water infrastructure projects, $350 million being allocated to support regional tourism, and another $300 million for exporters to continue to access global supply chains. The government major spending and investment also include the NDIS and mental health, and also the first home buyers. Among all of these budgets mentioned, of course, there are areas uncovered and hasn't been looked after, including long-term or older unemployed people and self-funded retirees. I can understand in a way that this budget gives me an overall impression of focusing on the future to the young people. Look after the old age, but if you are matured, grown up, you need to give. That is my overall understanding and impression. I hope I can explain these policies into a more practical way. I hope I gave you some examples that may be very practical and applicable to your current situation. Well, everybody's situation is different. There's no identical business in the current situation. If you need some specific advice, please talk to a professional accountant and tax agent. They will analyze your current situation and take benefit of the federal government budget of this year. Hopefully it's helpful. Thank you very much for your time. If you need me, you can contact me. Here is where I am in Collins Square of Melbourne. Here is my number and my email address. You're more than welcome to contact me, and let's start talking. Thank you.